Yolanda, we had a bit of a setback yesterday, but shares resuming their upward momentum today, and really we have had a couple of really good weeks on equity markets. So do you think it's time for a bit of consolidation?
I think we've seen consolidation over the last week. I think we saw volumes were quite thin last week. We've seen volumes increase this week marginally, and it's purely just on profit taking. The market is really waiting to see any real news or confirmation that the recession is over, or close to being over at least.
Of course, we did see the strength coming through in the markets when the US earnings season reported, and of course lots of those companies did report better than expected earnings. Do you think that those earnings have now been discounted by the markets and we're looking for something more to give us further upward momentum?
Yes, one can see in the market there's just so much nervousness that even if the earnings are better than forecast, they're looking at real data, jobless numbers, GDP numbers. Those are the kind of numbers that are really going to carry us, and we need positive numbers coming through there in order to see a recovery.
And of course, we did see jobless numbers about 3 weeks ago that came out of the US that gave the markets quite a scare and sent it back quite sharply. We are getting more jobless figures out today, I think. We're also getting house sales figures out of the US, and we have UK GDP figures out tomorrow. Do you think the markets are going to be looking very closely at those numbers for further direction?
Yes, we are. I mean, we can see that the Dow is open, or S&P future is positive today. They're expecting US existing, or exiting sales rather, to be positive, but those numbers are going to be very important because, like I say, without that, the recovery, consumer spending is not going to increase, and we're not going to see the desired effect in the economies.
And of course, we did have the Federal Reserve Chairman just a couple of days ago, that's Bernanke, saying that unemployment is going to be a problem in the US until 2011. So really those jobless figures are likely to continue disappointing, I would imagine.
I think so too, and I think the market's probably pricing, but there has to be a change. There has to be a turnaround. Jobs will be lost. I mean, it is a lagging indicator, but there has to be positive numbers coming out of there. We can't keep seeing job losses perhaps going to 13%. So it is a very important number, even though we've been given the indication that it's going to be a problem for a while.
And of course, you did say the volumes have been quite thin last week, picking up slightly this week. But do you get the feeling that investors are really just sitting on the fence at this stage?
Yes, and you can see that clients are not willing to put their money into the market, and like I mentioned earlier, it's purely profit taking. You can see the guys are just, with the run up, take your money.
And of course, we have seen some of our companies now coming in with reports, and we're going to get much busier in the reporting season as it takes off. We had some results out this morning from Kumba iron ore. How did the market respond to those figures? Because they looked pretty good on the face of it.
They did. I think the one thing to note is that the dividend payout ratio was reduced from 90% to 67%. And one would have thought that the market would have taken that negatively. But Kumba has also come out to say that 80% of their sales that they redirected from Europe, was covered by China, and they're expecting those sales to be maintained by China for, H2. So the market's taken that really positively.
Well, perhaps, we know that Kumba's parent Anglo-American didn't pay any dividend at all, so perhaps the investors were just grateful to get a dividend. Looking further afield, we also had Bharti's results out this morning. That was in India, and of course, very little said about that MTN deal, but the market really is starting to anticipate a deal between Bharti and MTN, isn't it?
Yes, and there is speculation or room in the market that is contributing to strength in the market, and it's really is buy the rumor, sell the fact. In terms of rand strength, you're seeing a lot of foreign inflow. With foreign investors looking for higher yielding investments in terms of bonds in your emerging markets, and SA is just one of those currencies that has that.
And some other interesting news that we had yesterday, and that was that Mondi PLC is to be reclassified by the Reserve Bank, and it can now be considered as a South African asset. And of course that led to a little bit of an arbitrage between Mondi PLC and Mondi Limited shares yesterday afternoon, didn't it?
Yes, it did, and you could see it was purely between Mondi and PLC, between the different equity lines, the foreign and the local, there was a discount between the two stocks. And many investors took advantage and were running pairs on those two stocks. And with the reclassification, you saw that unwind of those pairs because that discount no longer is there.
Well, could this possibly set a precedent for other companies? We know that British American Tobacco is an inward listing, and obviously if that was reclassified, that could be big news for our market, couldn't it?
I think that rumour is unfounded based on the fact that Mondi had a strong case for the unwind, because it was one company which had a foreign line and a local line, that benefited, in equal economic terms, and it really had to, there was no reason to have a foreign equity line. So that was more in terms a correction more than I think more a correction in terms of the balance on Mondi PLC.